Good morning to all traders and welcome to this Wednesday's Market Insights video provided to you by Orbex. Today, we're going to talk about oil, WTI oil, and also gold. It seems that there is some risk appetite coming back into the market, with optimism being driven by the infection and the fatality curves rather than the yield curves that we have been listening since we know about economics, to be honest. Now, the crude oil slipped lower yesterday following the API, a huge API inventory build. However, it has managed to recover, and that was quite a bit following the some change in the sentiment by talks that the OPEC Plus is actually discussing about a cut in output, but that would only be the case after May, because April's deliveries have already been scheduled. Now we have the AI report today, so that could indicate that we're going to get another massive stocks appreciation, which would actually come in with a decline in the oil market. That decline would also respect and validate somehow the pattern that we're going to look in a minute. Now, gold on the other side, well, gold has been moving to the upside, right? Now, we've seen this, the risk, of course, around coronavirus, increasing safe haven demand. We've seen the interest rate cuts starts flourishing for the gold market, of course. However, and the truth is not, we've seen the banks purchasing, like Russia, of course, gold again. I mean, stacking up more gold. The question, though, here is, if banks have stocked as much as gold, well, when are they going to need to get some cash out of the market? Well, there will be at some point that we will be desperate to get some cash out of the market, like that we've seen with the equities fall, right? Because everybody hedges on gold, so they need the liquidity, then they went to gold and sold. So it's not necessarily that we're going to see safe haven flows coming into and out of the gold market, but it's very possible, right, that we'll see actually the gold markets, since they're used for hedging, being a lot of actually cash being withdrawn outside of it, which would suggest a decline, at least once the things start heading that way. Because for now, we've seen a respected upside, I would say, but I'm not sure how long it's going to last. We're going to see that at least on the technical, from a technical perspective, because everything else is uncertain, everything else is unclear. So without further ado, let's start on the oil market, right? Now, we talked about this last Wednesday or Tuesday, if not mistaken. I'm still expecting another move to the downside over here, right? I see this as 3 primary, 4, and then 5, which means we're going to go for fresh lows. Now, since we've had this ending down here, wave 5 in the intermediate and also in the minor, we moved up, right? That's 1, 2, 3, 4, and 5. That completed wave A. Now, due to this structure, I see this as a 1, 2, 3, which is an A, B, and a C, right? Now, we've had waves 1, 2, 3, and currently we're heading for wave 4 in the minute degree, right? And that tells me that we're going to get another move to the downside to take out the 61.8 Fibonacci extension and then move higher, again with an impulsive move to take out wave 4. Now, this could be, if it's down there, which is the previous wave 4 as well, that will make a very good chance for a sell. However, we could even go up to this level, which is around the 40 or the 40 to 50, as is the 50 Fibonacci retracement of the longer term move, right? Now, the truth is, if the AI comes out worse than expected, okay, and it's probably going to come very bad as the API did, we're going to see prices moving lower. That would confirm the 5th wave for wave Y over here. And that would validate technical and fundamental. The fundamental would validate the technical, actually. And then we're going to move higher. Now, wave C can end anywhere about 29. So this zone, I know it's big zone, but volatility is high, as you know. This zone is anywhere where I'm expecting prices to indicate further declines. If we break above 42.50, then forget about this. We ended down here and we're moving up. But I doubt that will be the case, to be honest, considering all the risks that are in play, because we're not just talking about weakening demand, we're talking about a huge output as well. Now, on gold, I will try to be quick here as well. Well, again, I still think that we're not done with wave 4, right? I see this as wave A, W, X, and Y here because of this ABC, and then ABC is just a double zigzag. And 1, 2, 3, 4, rule of alternation respected here, and then wave 5, 1, 2, 3, 4, and 5. Since we've had 5 waves to the upside, that suggests that we might start seeing prices now start moving lower, right? If we start moving lower, we can head down to anywhere below wave A, the 1450, to take out wave C. Now, the 100 Fibonacci extension is at 1424. If we move lower to take out the ascending trend line over here, this is going to be actually, this is also a very good possibility, right? Now, the case here is, however, that if prices start moving higher, right, and we break above the 17, then most likely this is going to be, well, to be honest, this could end up being a leading triangle, right? Because we're not far from that. We have, 1, 2, 3, 4, 5, yeah, 1, 2, 3, 4, 5, and 1, 2, 3, 4, 5, breaking above that. We're going to be ABC, and then we're going to get another move to the upside to actually take out wave 5 in the primary degree, which means we're not going to see a decline, and wave 4 most likely has ended around the 1450 level.